Good afternoon, everybody. Thank you so much for joining us for another Business Horizons live session. On behalf of the UK Space Agency, my name is Jeremy Ambrose, and in partnership with Entrepreneurial Spark and University of Strathclyde. Now, we've got a really interesting topic, and actually one of my favourite topics coming up for you today, which is investor readiness. So you've surveyed the funding landscape. It's now time to get that all-important documentation, all-important actions in place to make sure that you are investor ready. There are a number of ways to get involved today and tomorrow, so please do have a look at the Slido. Very important. There's a couple of things there, so you can use the event code on the QR code right on your screen just now, or just go to slido.com and add in the code N686. Interact with us, get some questions on there, because as we go through, it's really important that you're asking questions to get the most out of both the experts and the entrepreneur. So if you have anything at all you want to ask, get them onto the Slido, and we will endeavour to make sure as many of those questions are answered as possible. If we don't manage to get to your question, then there will be the blog that comes out on our website in the next couple of days, just answering any of the questions that weren't, but also just to bring it all together. And there'll be one solid place for you to get all those actions, those tips in place for your investor readiness journey. You are all watching on our website via YouTube. So in one of the corners, there should be some settings if you make sure that you've got that turned up to HD, so you can see and hear us okay. And also, just if you go down on the web page, you should see a few different links as well. There's one for the Slido, there's one for our next Action Connection session, one for the Discord channel where you can continue the conversation as we go through this. And also, right down at the bottom, there should be a nice banner to say, sign up for the next session, which is next Monday on supply chain and market dynamics in the space sector. Has to be said, it's not just for space people and those people in the space industry. It's going to take so many different industries coming together to boost the space industry, so many different sectors. So this is not just for investor readiness for the space sector. And I hope you are able to get what you want out of it today. So, the topic is investor readiness. The key outcomes for today are that you understand what it takes to go for investment, know what to avoid when going on the journey. There's a few deadly sins in there to avoid, but also to build up an action plan and a question set for you and your business. Again, once you've surveyed that landscape and you're ready to go for investment, really important. We've got some live guests as well. So we also have Joe Partner at Hyper McLeod. We have Anna Ashford, who's an investment director at Alpaca Growth Specialist. And we have our entrepreneur, who is Dan from Odin Space. And we'll come to them very shortly. But without further ado, let's go straight into our video on investor readiness. Pens at the ready. Make sure you're picking up on those action points and taking some notes. Roll ET. So you're thinking about raising investment. You've surveyed the funding landscape and decided that investment's right for you and your business. The space sector is notoriously burdened with the need to raise significant amounts of capital just to get you off the ground. But this can be fraught with risk and uncertainty. In this video, we will explore different aspects of raising investment. You will take away actionable insight to help you improve your chances of success before, during, and after investment. It's key to note that investment may not be the best thing for you and your business, and that's okay. You don't necessarily need investment to create a sustainable and scalable business model. There are still great learning points from the investment journey to action in any business at any stage. This session will also focus on the aspects of your business model that you need to watch with intent to gain the right investment. We will run through the 7 deadly sins of going for investment, hear from some entrepreneurs about their journeys, and get you some top tips from experts to point you in the right direction. We're now going to hear from 3 entrepreneurs, one who raised investment, one who was close to raising investment but said no, and the other one who decided that investment wasn't for them. Let's hear their stories.
So we started out almost for fun. We didn't expect it to become a business of any size. So when we raised money, it was really a friend of mine and I sat down at dinner and I said, hey, got this little thing I've been doing, do you want to be involved? And I'll take the time, a month out of work, and I'll do all the work, and you put up some money and then we can get it started. And it was really just over dinner, and we agreed to do it. And the amount of money it wasn't material for him. It wasn't going to affect his lifestyle at all. And the amount of time out wasn't going to affect my lifestyle at all. Of course, 6 years later, he's in a position to exit at a very, very nice multiple. So, this was really just a friends and family deal, and it wasn't enough money that it kept me up at night. I knew that I could pay him back if I had to. The good side of raising money from a friend is I had an accountability partner, right? If I had gone and written a personal check for this, it was all my cash, or I had gone to the bank and gotten a loan for the amount of money, which I could have done, and in retrospect, I would have done personally much better out of it. But I had an accountability partner the whole way. So there was always someone else I was working for, and that's really important. It wasn't my money to misbehave with. It wasn't my money to waste. It was always someone else's money until he's had his capital back and returned. So don't discount the value of that, of the accountability partner part of it.
We've been presented with opportunities within the first 10 months of the journey where we were sought out to be acquired. It wasn't such as so. And initially, this big entity reached out to say, hey, we're interested in sponsorship. We're interested in providing some support. So as one does, we engage in the conversation. We say, hey, where does this conversation go? That turned over a 3-month period. It turned out that, hey, they actually wanted to acquire us, and it was a very sneaky way. So again, put us on our guard right from the get-go about, hey, be careful for the sharks out there. But at the same time, how do you prepare yourself to truly evaluate a business in order to actually follow up with the funding? And so during the first 9 months of 2019, there was no accounts, everything, the CFO was right here, Excel sheets, etc. And then you get closer to these scenarios and it kind of gives you a wake-up call and say, hey, you need to get your accounts in place before you can even consider such an opportunity. But we were in the first 9 months of business. And what we were generating at that time, 12 months later, it 4x'd. So we had to kind of take a step back to say, well, if we sell out now, or if we give a little portion, a little chunk of the pie today, then we're going to lose out in the future because we really have no idea where this is going.
So I've been running businesses since I was 20, and so that's 27 years, which is a long time, but it was only probably the last 5 years that I actually considered investment. Up until then, I was self-generating, which is brilliant and a fantastic place to be in. The journey for me was a short one, over and done with within the year, because I chose not to go for investment long-term after that. But it was a fantastic process and I'm glad I did it. And I did it publicly, as probably you'll see, with Dragon's Den.
So you've just heard from 3 entrepreneurs who went for 3 completely different types of investment. Firstly, the friends and family route. Secondly, that acquisition, which turned into bootstrapping. And thirdly, angel investment. Now let's hear from them on their top tips, and also hear from an expert on what they would recommend you do to get investor ready.
Having those books ready from the get-go is very important, so that way we can really have an understanding right from the beginning financially where we start, and we can easily show that to any potential investor, any potential partner, loan, the whole 9 yards. We have full clarity on what the numbers look like, and they're not vague. So I think that would be a number one. If I would do something better this time around in preparation for funding, it would make sure that my accounts are set up prior to launch.
The critical thing to do is plan ahead and start early. You need to critically know what you need and when you need it. And when you think, if you're sitting there and you're thinking, I'm needing a few £100,000 next week, the reality is you're in big, big trouble. So when I'm saying plan ahead and plan early, I'm in my mind, I'm thinking like a year out. And once you've done that, as part of this planning piece, you need to be thinking about who's on your delivery team and who's going to be running your business while they're busy running the investment, because running the investment will be a full-time job. So how is that going to work through with actually keeping the commercials going at the same time? At the same time as this, what you need to be doing is you need to be getting your house in order. The next company I see who's done everything correctly will be the first. So don't worry if you're sat there thinking, oh, I haven't done this and I've got loose ends here. That's fine. That's all perfectly normal, because the last thing you want is you're negotiating investment terms and you're busy worrying about some little loose end that you hadn't fixed 2 or 3 years earlier. So get all that sorted up front.
Well, the first one would be get your house in order. You really do need to have a clear direction on all your digital media channels and know your numbers. The second one, I'd be saying to you, preparation is key. Get your pitch deck ready and your investment pack ready, most to the point, because when you do get an offer or you do have somebody interested, it's great to have that information at your fingertips. Next thing, it's time consuming, so time consuming, and at some stages it becomes a full-time job, so you've got to be prepared to give that time and attention to the project. You need a convincing proposal and a huge amount of tenacity to get it over the line. Investors are looking for entrepreneurial, innovative business owners, but you have to have an idea that's marketable as well. And so you need to put a convincing proposal together. And then finally, my final thing would be to stay at the helm. One thing I did learn was you can ask for advice and seek investment from people who have been there and done it, but nobody knows your business as well as you. So take advice, let them help you, but remember to just stay at that helm yourself, because it's your business.
Everyone's experience with investment is different. There's no one-size-fits-all approach. But I think you'll agree that just hearing from the experts and the entrepreneurs, there's a lot of synergy with what they're saying and advising. Have you spotted a few of the 7 deadly sins yet? Those ones to avoid? Have you managed to write down some actions to take with you into your business? Now let's highlight a few areas to be mindful of once you've got the investment over the line.
Have the right team around you, surrounding you, and then learn from them. I'm going to say learn from them because you need to grow into that space as well. But it's okay to be a technical whiz and have somebody as your CEO running the company, driving it forward and doing everything that an investor needs to see and do.
Day one after you've got investment through the door, the critical thing what you need to do is make sure you don't wake up and think, oh, I've not raised enough money. Now, that problem is the most common problem, a big common problem, because frequently people don't actually take into account the deal costs and how they're over ambitious about timings or anything else. So step one, make sure you've actually raised enough. Step two, make sure you actually properly understand what you've signed up to. It's sensible to get a date in the diary quickly to go and have a board meeting, understand with investor directors. It may well be the fact that with your investment agreement, you've ended up with several conditions that have to be done after completion. Action them. You don't want your first relationship piece with your investors to go, oh, whoops, I've dropped the ball on that. So these are the types of kind of immediate things I'd be doing. And then I suppose the other thing which you need to make sure you're doing at the same time is actually go back and say, well, what did I say to that in that business plan I was going to do? And now how are we going to do it? And make sure that you actually start actioning that all through, because once you've got the investment in the door, the investment's the beginning. The actual bit is, okay, now it's time for you to do your day job. Now it's time for you to deliver on what you've said you're going to deliver on.
So that's just put the spotlight on a few of the things that you need to get done after you've got the investment over the line. Have you been writing down those key actions and those key questions to make sure that you know what the roadmap looks like from that day you decide to go for investment all the way through to exit? Have a plan, have a roadmap, know where you're going. Now, throughout the video, there are a number of factors that you need to take account of or even avoid. So let's do a quick recap on the 7 deadly sins of going for investment. Number 1, don't take your eye off the ball. Investment's a full-time role, and it can take a long time. Business as usual needs to carry on, so don't let the revenue slip. This will affect the value in the business as well as your growth trajectory. Number 2, make sure you've got your documentation for success in place, that due diligence checklist. The right documents need to be in place at all times. Get your legals, your financials, your HR, your systems, procedures, board minutes, all of the above, just to name a few. Be prepared to be audited and have everything in one place to be able to send at any given moment. Number 3, make sure you've got the right team in place. Team dynamics are essential. People buy from people. Put your team together and show how credible you are in the marketplace. Why are you uniquely placed to deliver on your vision? And who do you need to put around you to make it all happen? Number 4, make sure you're valuing the business correctly. It can be a dark art, but just be realistic. A high valuation could come back to bite you. A low valuation might not be able to attract the right investor. Show the true value in the company and be, again, transparent. Number 5, make sure you know the equity splits and what's on your cap table once you've got the investment over the line. Focus in on what investment means for you in the ownership of the business. Who has the rights to action? Who has the ability to veto at board? Will there be different rounds? And will this funding get you only part of the way? How do you need to contract with the investor to help with future rounds and the journey to growth? Number 6, investment is going to take a lot of relationship building. Relationship must be struck between you and the investor. They're essentially going to be a huge part of business. Make sure you do your due diligence on them as well as them doing it on you. Have the right paperwork in place and make sure they're the right investor for you. And finally, number 7, don't forget, investment is a huge, long journey. And getting a yes is just the start of it. What are you going to do after you've got the investment? How are you going to use the investor and their cash? The effort that you put into the detail after the investment could be really useful to you actually getting the investment over the line. Another point is, have you actually raised enough money? What are the burn rates? What's your growth trajectory? And how are you going to get there? How long is this investment going to last for? Do you need another round? So we've heard from the experts, the entrepreneurs, and also we've heard about those 7 deadly sins to avoid when going for investment. I hope this moves you to now question what you need to get done in your business to make sure you're investor ready and to give you every success when going on the journey. Okay, so now who's playing Spot the Difference? The dog's gone from behind me. The blanket's gone. So that's the investor readiness video. Please, let's get some questions going for the expert panel. We're just about to bring them in, and they are experts. So please get some questions in. If there's something burning, ask it on the Slido, on that link that just popped up, and use the code as well. So join us on Slido and ask some questions. So I want to bring the experts in. Again, this is an exciting topic, and it's an exciting part of anybody's journey when going for investment. So I want to bring in Jo Nisbet first. You heard from her on the video. Jo, if you wouldn't mind just introducing yourself and telling me who you are and what you do.
Thanks for that. I'm a partner in our entrepreneurial team at Harper McLeod, so I focus my day-to-day job in getting money into companies, growing them, and exiting out the other side.
Yeah, so fully versed in everything in terms of investment, and I know that a number of the companies that we've worked with have worked with you, and you've seen the full spectrum. So yeah, thank you for joining us. The next person I want to bring in is Anna Ashford. So Anna, hello. Could you let us know who you are, your role, and what you do?
Perfect. Yeah. Hi, everyone. I'm Anna Ashford. I am Investment Director at Alpaca Growth Specialists. I look after the investments that Alpaca makes in its clients, helping to grow those businesses, typically small to medium SMEs. My background is as a lawyer and kind of commercial corporate space, so understand everything that you've been talking about in that video in terms of getting your house in order. Massively endorse that.
Yeah, thank you so much for joining us. And let's start there, because it's an absolute minefield. Where do you start with getting your house in order? You talk about having all the different documentation in place, but what would you be saying to somebody as a kind of an essential thing to have in your locker when going for investment? Anna, let's start with you.
Okay, I think if kind of Joe and I think back to when we trained as lawyers, you would have had a physical data room where everybody would put, or the company would put all the contracts, all the kind of important key documents, financial information, etc., into that room where investors could, or purchasers could go in and look through it. These days, luckily, it's all done online, so it's a lot less dusty and a lot easier for everybody to access. But in terms of thinking about what should go into that data room effectively, you want to be thinking about your key suppliers. Who is it really crucial that keeps supplying you? What contracts do you have in place with them? Then the flip side is looking at your contracts with your customers or your clients, and again looking at what contracts you have in place with them to try and evidence and secure your sales pipeline. So it's looking at the contracts coming into the business and the contracts going out the other way. Also looking at your employment contracts, your shareholders agreement, any sort of financing documentation, and numbers. I think we're probably straying on to the next topic, but numbers was touched on. So all that kind of financial information, forecasts, P&Ls, etc., all that management information, having all of that.
A whole host of it, an absolute whole host of it. Yeah, there's so much stuff, and I really like the idea of the data room as well. So it's almost like a virtual room to go into, and the investor can go in and just get a holistic picture of the business at any point. Joe, are you? Yeah, you were nodding away there. Is there anything else you'd add to that?
Yeah, I think Anna's spot on. I think what's really quite good practice is like day one of your business or whatever day you're on now is start getting folders on your desktop. Okay, that's all my supplier contracts in here. That's my finance stuff here. That's my HR stuff, right? Because there's kind of two stages to house in order. There's step one, actually do it, and then there's step two, is know where it is. Step two, know where it is a common issue. So being organised, just knowing where it is, I think helps a lot. Particularly when it comes to kind of companies which are in the space sector, which is by and large heavy tech. What you quite often will see is there'll be issues with intellectual property and ownership of the IP, and what the IP journey has been is going to be something any investor is likely to have a laser focus on. So make sure you've got all the documents there for that, and go out and get advice. Like pick up the phone, have a conversation with somebody and say, look, this is where I am now. Is there anything red flagging you what I should need or whatever else, right? Have a conversation with people who are in the know about it, and I think that would help enormously. But certainly when it comes to diligence, what we common issues which start causing delay in deals, it's a lot around IP. So I'd absolutely really home in and making sure you've got it sorted.
Yeah, definitely, and I like that. Again, I really like the idea of having it in folders. Again, it's readily accessible. Somebody can just pick it up, have a look at it, or you can send it off to an investor, potential investor, and it's all in one place. And it's so see-through, it's so transparent that there's trust built up between all parties as soon as you're able to put that your finger on anything at all whenever they want it. So yeah, interesting point coming in from the Slido questions. One of them is, at what point is a good point to go for investment? Is it idea phase? Is it prototype phase? Do you have to have a live product? Any thoughts on that? Joe, I'll come back to you.
I think this question's quite business specific. And I think to answer that question, what you need to do is you need to have a good understanding of what your financial needs for your business are at, and what current stage you're at. So it's quite difficult, one size fits all in that. What you need to have done is you need to have taken your business forward enough so you can go to somebody and say, okay, I've got a credible, backable team. I've got something here that's validated. Now, depending on what it is. The validation of that is going to be different. Validation to some might be I've got paying customers. Validation for others might be I've got through first phase trials. So that's quite different for the different types of businesses. But you need to then understand those. At what point how much can you take your business forward for non-dilutable funding? And at what point do I run out of funding? So in order to answer that question, what you really need to look really closely at your business and understand, what do I need to spend when, and how am I going to finance that? And you need to be doing that, because numbers in this vary, right? But give or take, you from start to finish, you could be like a 9-12 month process to raise its money. So that's why, if you really understand your numbers and understand your business, you'll be able then to make a really sensible decision. Okay, I need to start speaking to investors now, not because I want investment now, but I need to build a relationship now, because 12 to 18 months down the line, I might be wanting to take their money.
Yeah, absolutely. Anything to add to that, Anna?
Yeah, I'd echo what Joe said in terms of understanding what it is you need the money for. I mean, as a live example, we've just been working with a business where they were looking for investment to help fund the production of the prototypes. But actually, after doing a bit of work and digging into that, they discovered that actually the cost of those prototypes was significantly less than they actually thought it was going to be, which meant actually with a bit of rejigging of the finances, they didn't need to go and take that external investment. Again, I mean, there are other options available in terms of raising debt. You've got the kind of virgin startup loans, etc., which might mean that actually it gets you further down the line with the business and to get it more established before you actually go looking for investment and diluting your equity in the business. Because obviously, an investor will be looking at the risk they are being asked to take. So I think often, the more established you can be, you're going to be giving away a different amount of equity versus somewhere much further, at the other end of that journey.
Definitely. I think that non-dilutable funding before you actually go for investment can certainly prove traction, can show you it's credible in the marketplace, but also prove that you know what you're doing when money is injected into a business. And it's that being credible and backable, and then being able to go for investment will also increase your success, your chances of success. Yeah, for sure. Okay. Again, another question coming in from Slido. Which channels are best when looking for early investment? Where can I go and find an investor? In your experience, where have people been able to find investors? Who wants to take that one? Go on, Joe.
Some of this will depend. I think what you need to first of all do is when you're looking for investment, first of all, I think what you need to do is I think about using Commencement Wide. First of all, okay, so how much can I bring my business forward with non-dilutive funding to de-risk it, increase the value, move it further forward? So step one, that. Then talking the arena of equity investment. Then what I think you need to do is you need to be constantly building up your network of people. We were just speaking to a guy about a fortnight or so ago, and he managed to connect up with somebody on LinkedIn, start a conversation. From that conversation, now he's hoping now we're now moving to a 2 million deal. So people can do things whereby take quite a proactive approach. So for me, what I would kind of do first of all is I would just sit down with a pen and paper and say, brainstorm. Okay, well, who do I want as an investor? Who would be the right fit for my business? And then start with that. Okay, so I've now got my A list. Okay, so how am I going to tap into those people? Oh, I see Jeremy's connected to that guy on LinkedIn. I'll have a quick word with Jeremy, see if he knows him, and then I'll get this inside chat, and then I'll send a request, start a conversation. I think you need to be kind of conscious as well. Different money costs different amounts, and how much you're going to factor in for that. Are you going to go for a high net worth deal? Are you going to go for a syndicate deal? Or alternatively, you're thinking, okay, do you know what? My business is really crowdfundable, right? So why don't I do that? Or where geographically where I am, there's great public sector support. So why don't I do that? And then I can top up with public sector support there. So I think what step one is, have an open mind, think of the possibilities, and think who's your who's your kind of A-list, and how do I get to those people? How do I start building those relationships?
And you hit on the key words there: build relationships. But the first point is just get it down on paper. What skills do you need in the business? Who's best placed to take you and your business forward to where you want to get to? And then go and explore. Right, who are the right people? Who are the right fit? Who are the serial investors who have taken these kind of businesses from here to here? And then target those, because it certainly narrows the field down if you know exactly what you're targeting and going for. Yeah, absolutely. There's a load of noise while going for investment, and there's a really good question on here about, right, any advice on maintaining the business as usual when you're going for funding? Anna, any top tips on just keeping the business going?
Yeah, I mean that is key, isn't it? Because obviously you take your eye off that ball, and then there isn't a business left to invest in. So it's not easy. Surrounding yourself with good people, surrounding yourself with a team that you can call on, and whether that is, again, depending on the size of the business and where they are, whether that is actually a team of employees, whether it's, your husband, your wife, your dad, whoever you could call on, depending on what it is that's needed, or external support. Be that your kind of professional support, the lawyers, accountants, etc., or even looking at things like outsourcing your social media feeds, because obviously even stuff like that takes up a huge amount of time. So it's balancing the cost of outsourcing that versus the time that gives you back to focus on getting the investment that you need, and not being afraid to ask for help, and not being afraid to outsource it as and when budgets allow. Absolutely.
I think you've hit on a real key thread there, and just being open to support and open to help, and actually asking the people around you, this is a full-time role. I'm going to need some support around me to go on this journey. Joe, would you add anything to that? Or you were kind of nodding.
No, yeah. I think Anna's absolutely right. I think that the other thing that you just might want to be reminded of this is, before you go for investment, there's likely to be more than just you in the business. There's likely to be a few people in the business at that time. So I think there's an element of, okay, let's just have quite a frank conversation here about who's actually good at doing what.
Yeah.
It might be the case of the chief exec is not the best person for that role, because there's quite a lot to do there about giving clear instructions to the advisors, negotiating with the investor, building that. So maybe that's actually better the guy who chief operating officer, or who's going to do that instead, right? So I think appoint someone to go, okay, you're the guy who's going to do that. Just come back to us with the key points, right? And have faith in the team round about it. And I think that makes the whole entire process easier. Where things, I think, where deals you see can start unwinding quite quickly is if you've got, let's say, a team of 4 people, and before any single minutiae, I think, can be done, there needs four people need to have their view on it. If 4 people disagree on it, all of a sudden it starts to kind of really slow down, and it's really difficult. So I think having one person kind of, okay, you're in charge, okay, it's got a bit of delegated authority within the team, and trust and faith to move that forward helps as well, and it also frees up time from everybody else, because they're okay, I know such and such, they're on it.
Yeah,
probably just sorry to jump in, but I think that's a really important point, and it kind of brings out the need for all the directors, all the shareholders to be on the same page in terms of what they're looking for, what their expectations are, what they're prepared to give away, what they're what the red lines are. And I think to have a really open and honest and frank conversation kind of internally before you go for the investment is really important, to make sure that everybody is aligned, because it's a hell of a lot harder to sort that out 6 months, 9 months down the line, and a lot more expensive as well, because you'll have invested time and money in this process. So making sure that everybody is aligned is really key.
Yeah, 100%. Everybody on the same page, everybody moving in the same direction, or as an old friend of ours used to say, everyone in the same canoe, paddling the same direction. Absolutely, yeah.
And they can be icky. They can be icky, horrible conversations to have, particularly when you're talking about money. But think how much harder it will be 6 months, 12 months down the line if you've started falling out or resentment has been building because actually maybe that person didn't feel that one was pulling their weight in the process, etc. So yeah, much better to flush those issues out now.
Absolutely. And again, it kind of comes back to the relationship building, not necessarily with you, the investor, and the investor with you, but actually in the whole team. Making sure you've got the right team dynamics and the right relationships to really push this business forward and fast. Yeah. There's another great question on here, and that is any suggestions from the panel on good ways to build a relationship with potential investors? So how do you build, we're talking about relationships, but how do you actually build a great relationship with an investor?
I think transparency, openness, honesty, credibility. We've talked about the due diligence and the virtual data room and being able to have everything to hand. You can massively build that credibility or lose it. Actually, the flip side is if the investor's asking questions and you're just not able to provide that information or the documentation in a timely manner, it's going to start, raising red flags for them. Alarm bells start ringing in terms of, well, if they can't answer this, what else can't they answer? So again, it really does underpin the importance, as much as it probably sounds a bit boring, but of having those documents in in the folders like Joe suggested, so that you can really show that credibility that you know what you're doing and you know your business.
I guess it comes down to communication, doesn't it? Being great communicators throughout any kind of relationship building process, but also understanding what the investor wants and needs, getting to know them as an individual, if it is an individual, and figuring out how do they like to be communicated with, what's the turnaround time on an email versus a phone call, or, all of that stuff. Communication is key. Yeah. Anything to add there, Joe, before I bring in our entrepreneur?
Yeah, the only thing I would maybe add in is I wouldn't underestimate the benefit in life of likability. Some people will mess up deals just because they're wildly awkward about nothing about in particular. Now, everybody, there's some points you are going to negotiate on, but see if you start being difficult on every single thing and you start wanting to rewrite what is standard market practice, the investor's just going to go, really? Is that really the type of person I want to be with? So I think when it comes to building a relationship with investor, Anna's right, be professional, be credible, be honest, admit you don't know what you don't know, but take the time out to actually get to know that person. Is that somebody actually you like? Do they like you?
Yeah, absolutely.
And if they don't, just have the courage to turn around and say, look, that's not for me. It's not for me.
And a lot of that work can be done up front with finding out who the right investor is for you. We've talked about getting everything down on paper, what skills, what do you need in an investor, which will kind of give you a better picture of how they would like to be kind of communicated with, and then be able to build that relationship. Thank you so much. We'll bring you guys back in very shortly, but I just want to bring in Dan, who is our entrepreneur who's going to join us. Dan, now, just give us a quick intro and just tell us briefly about your business that you're part of right now.
Sure. So essentially, as a business, we're looking to track small-scale orbital debris. So little pieces of debris orbiting Earth at high speed, causing danger to satellites. So the current industry standard goes about as low as 2.5 centimeters worth of debris, which will obliterate a satellite if it hits it. But even pieces smaller than a centimeter can do significant damage, if not destroy a satellite instantly, particularly if they hit key components. So at the moment, there's kind of an industry-wide technological limit as to what we can measure. We're looking to extend what as an industry we can measure and provide that insight and analysis to satellite operators to help them manage their own risks, either directly by trying to move out of crowded orbits or indirectly through insurance products.
Yeah. And I guess, let's just look at the video that you've just watched. Is there anything in there that you kind of raised a few eyebrows? You thought, that's an action point I need to take in a business. What are your thoughts on it?
I think it's a funny thing, isn't it? Because there's a lot of kind of sort of common sense ideas in there, but you need an external party to bring that common sense to you to really emphasize the importance of it. And I think certainly one of the things that my co-founder and I have found is that you've got to focus on so many different things at once that prioritizing which ones are the most important, which ones aren't, is a bit of a tricky process. But the themes kind of kept coming through in that video of being prepared, make sure you've got these answers ready to hand, make sure that you can point to your financials, or whatever state they are, whether they're kind of forecasts or actuals or a mixture. So that's a pretty consistent theme, I thought.
Yeah, definitely. And you're going on the journey towards investment right now.
Yes.
So what are you finding, apart from it being a full-time role? Have you changed your mind on who it is that needs to be investing in business? And talk us through the journey a little bit.
I think a few times. So we've kind of started from a position where there's quite a significant capital cost to doing what we want to do, which is go from our kind of land-based prototype to our first orbital detector. Yeah. And that's, I imagine, quite a consistent theme for many of the space entrepreneurs on this channel, because it's expensive putting stuff into orbit, right? So we knew that we wanted needed investment, really, because we need that capital injection. What's been a bit more of a journey is whether we break that into a pre-seed and then a seed, or whether we go for a significant amount up front, whether we look to support it with grants, how we approach crowdfunding, even if it's not a direct kind of consumer product. The options available to us are also varied, and that also then comes with a question of which ones do you prioritize, which ones are right. So I think that was a bit of a surprise, and has been more of a process than I think either of us were expecting.
Definitely. And you talk about that prioritization. How are you actually narrowing it down? How are you creating that prioritization list, as it were?
Yeah, I think again, it's some of those kind of common sense things, and almost a certain amount of permission to kind of go, well, it's not just about the capital; it's also who comes with that capital, because a pound is a pound, a dollar is a dollar, but different investors bring different things to the table. I think where we needed a bit of a course correction was to kind of look at that investment, look at our skills, and look at the skills gap, and go, well, what would we want to bring into the team, either as an investor or as a kind of advisor, or both, or either. So that was kind of the place where we started, and then kind of matured that consideration of what we want to bring into the team, and then that naturally leads you to, well, if we want this type of hands-on involvement, probably want more of an angel investor, rather than 2,000, 5,000 different crowdfunders with nothing to add apart from capital. I think that's been a bit of the journey.
Yeah, definitely. And I guess you're not alone when there's nothing to sell right now in terms of a product, maybe little revenue coming in. Therefore, putting a team in place is going to be really difficult. But actually, the team that you've put in place has a vast array of expertise, but you're not paying them. How have you done that?
That's a really good question, and you're absolutely right. I mean, we're a long way from revenue, right? So what we're selling is data, and we need to generate the data before it becomes valuable. But I'm quite lucky in the sense that my co-founder he's a technical co-founder, but and you've met him, Jeremy, but he's a very personable technical co-founder, and I think he's probably not as conscious of what he's doing as, say, perhaps I might need to be, but he naturally builds networks, he naturally builds influence with people. And we heard from both Anna and Joe as to the importance of build a network. That's one route in which to find investors. Yeah. It's also a route in which to find that support, right? That kind of people who are interested in the project before there's any kind of question of compensation. Their compensation is kind of intellectual or emotional in that sense.
Yeah, absolutely. And there's a bit of, I guess, thinking about it from a point of view of sweat equity, people putting in the hard yards now to then maybe convert later down the line. But also, you're kind of taking them on the journey with you, and they get a full kind of holistic view of the business. And they just might be the ones that go, do you know what? I'll put my hand in my back pocket when the time is right. But building that network seems to be really crucial for you, especially, with some lofty ambitions. And you know that, but that's not, you're not alone. As you quite rightly said, there's a number of people listening into this going, it's going to take a huge amount of capital to get my thing into space. But I guess being really clever about that, breaking it down, understanding what you need at each milestone is going to help with putting people around you, putting the right funding around you to show traction, to show that you're credible and investable at any one time. And I think, certainly from what I've seen of Odin, you guys have done that really well. So I'm interested in that, the board versus advisory role. How have you kind of looked at that? Because, you get investment over the line and you get a board.
Yeah.
But actually you need some credibility within an advisor role, right? So how have you approached board versus advisory roles, and what's the difference between them?
Well, I think our board is the pair of us as co-founders at the moment, and the expectation would augment that as part of the investment process. The advisors, we're quite lucky anyway in the networks that we have. That there's a lot of smart and interesting people that we know, who are just quite happy to just have a conversation over a beer about stuff. That sort of very informal advice has been hugely valuable to us. Even sending problem slides to people that we used to work with or former bosses and stuff, to bouncing ideas off our dads, for example. That kind of it really is that informal. And I think what has been a bit of an eye-opener for us is how do we then convert that into something a bit more structured, which I think it was kind of mentioned by one of the entrepreneurs in the video, that you have that accountability that comes from somebody who's a little bit more invested. Now, they might not be capital investments, but if somebody's considers themselves to be an official advisor of your company, then they're going to hold you to more account than somebody who's just a mate down the pub.
Yeah, and it's a really important point, isn't it? Holding you accountable on the journey that you're going on, and having the right people around you who are all in, are going on the journey with you. Because literally just somebody having a conversation with you every couple of weeks and asking you what you're doing next, why haven't you done that thing, is really important. So, alongside that investment comes the accountability. And if you don't have the accountability, then I'm sure you'll agree with Dan, and tell these people, just go and get it. It doesn't have to be somebody who's putting capital in, just a critical friend. Somebody who could actually potentially put in later down the line. Yeah, absolutely. I just want to come to a couple of questions that have just come through on the Slido. And it's maybe pertinent to you, Dan. You might be able to answer this one. How do you figure out which skills to develop within the business and which ones to outsource? Have you been down that journey?
So we haven't gone down the outsourcing route as such. Certainly not in any kind of capital sense. We're not a particularly capital intensive business because of that hurdle we have to cross. But in terms of the skills gap that we have, you kind of have to be a little bit honest. You will have to be extremely honest, both with yourself and with your co-founders and anyone in your team, and have those conversations you tend to shy away from, which is, I feel most excited or excitable when I'm doing this thing. I feel most demotivated when I'm doing this thing, but I have to do it. I'm good in the morning, I'm good in the evening, that kind of thing, all the way to I have no idea what this is, and no matter how many articles I read about it, people I speak to, it is not clicking. Yeah. And then you can kind of map that out a little bit. I think where you really need that advice coming in is from people who have done this kind of thing before. We're both first-time founders as well, so knowing, we can work out from our experiences to date what our skills are and what our skills gaps are. But knowing that there's a gap there when you don't even know that something needs to be done is trickier, and that's where you need that external input, right, from someone who's done this before and probably made a mistake before. That way you can try and avoid making mistakes.
Yeah, but that's a really interesting point. Energies, on the video and throughout speaking to the experts and to you, it's a full-time role. There's so much that goes into it. And just understanding what gives you energy and what zaps your energy, those kind of superpowers and those kryptonites, I guess, will then go, well, actually, that thing over there, be it social media, be it some kind of marketing outsourcing, whatever, that's probably something that would be on the outsource pile to allow you free time to work on the things that you're great at. That give you energy, that's going to continue you on this path to making sure that you're actually really successful when you do go for investment, but everything's in place all the way along. So I would probably agree. Understanding the superpowers and kryptonites in the founders is probably a good place to start. Yeah.
I think motivation is a really interesting thing as well, right? Because those things that do give you energy may also not be priority. Certainly that entrepreneurial spark, sorry to slip the pun in there, but that entrepreneurial kind of feeling that any entrepreneur has is you want to go and fix things, you want to go do things, you want that drives you forward. If that's directed at, say, the social media marketing, in our case, that would be completely wrong, even if we both really were good at it and really enjoyed it. It just isn't the right thing for us to be doing right now. So I think that's one that you have to be, or certainly I have to be. I don't know whether this is true for everyone, but I have to be quite conscious of, am I working on the right thing? Even if that feels like the most exciting thing to be working on.
And I guess that's the importance of having a great project manager or somebody who can plan really well, get a great Excel spreadsheet going that just says, this is the journey we're going on. Here's the milestones that we need to hit. What do we need to do tomorrow and today to move us up that ladder? And then understand, there's priorities. What needs to be done now? What do we need in order now? And, move into investment and beyond and all that. So, yeah, absolutely. Dan, thanks so much. I want to bring in Anna and Joe again now, just to kind of tidy things up a little bit, because you raised some really interesting points. One of the things we're talking about is holding your own, staying at the helm, valuing the investor, but also the investor valuing you. And there's a question that's come in about, are investors put off by employers or businesses who put ethics first? Anna and Joe, in your experience, have you ever had anybody say no to an investment simply on ethics?
No.
Go on, you go, Joe.
I don't think ethics is an issue, right? And I think actually there's quite a lot of body right now going on with for profit for purpose and making sure we're investing in the right things. And I think there's actually quite a movement towards that, particularly in the last 18 months, 2 years. So I think there's a lot on that. When you say put ethics first, I think there comes a degree of how you're doing it. So, for example, we have had a company which decided to incorporate itself as a community interest company, which means its assets locks you can only get so much money back out. That was an issue, so there had to be an entire. They took the kind of almost like ethics too far. So I don't think there's any issue with in terms of ethics first. I think there's a lot of that, and I think the right investors will absolutely support that. What I think you just need to think about is how does the ethics fit into the financial model?
Yeah, absolutely. I think just being able to know what you want from any investor, know what you want from the business, and it probably comes from setting up the business in the right way in the first place, to either lock in those values, those ethics, and just know where you're going. Yeah, absolutely.
Yeah, I'd agree with that. I think there is definitely a move towards more ethically run businesses, more sustainably run businesses, and having more transparency and not just kind of paying lip service to it. I mean, at Alpaca, we talk about, we like working with enlightened SMEs, businesses that, look at the kind of the triple bottom line, the people, planet, profit. It isn't purely just profit. And the community interest company is one way of doing it. Like Joe mentioned, there's a real push and a real kind of momentum growing in the UK now with B corporations, which is a really interesting way of actually ensuring that you are held accountable and you are not just paying lip service to those kind of ethics and the sustainability, and getting that kind of accreditation. And I guess if that's important to you and you've got an investor where it really isn't important, it's probably not the right investor for you.
Yeah, totally. Listen, thank you so much for being part of today. It's been absolutely fascinating. I hope everybody's got some top tips and got an action plan ready to take back into their businesses. So yeah, Joe, Anna, Dan, thanks for being part of today. Yeah, thank you. But we're not finished just yet. So very importantly, to carry on the conversations around investment, we have the Action Connection session. Now, there should be a slide coming up very shortly. There you go. So there's a QR code there to get involved with the Investor Readiness Action Connection session this Thursday, 12 till 1:30 p.m. Very, very important. If you're, there's going to be like-minded people on that, also going for investment. Let's just get on, chew the fat, ask the questions, share best practice, and help each other to achieve what you want to achieve through the Action Connection session. I want to check in on those outcomes as well. So do you really understand what it takes to go for investment now? Do you know what you're looking to avoid when going on that journey? And have you actually built up that action plan and question set for your business? There is a poll on Slido right now. Please, if you are on it, it only takes a couple of minutes. Fill it in. It gives us great feedback on how we run these sessions, but also how we will run the next 2 sessions that are coming up after this. So leave us feedback on the Slido. You can also leave us feedback on that QR code that's on your screen right now. It just takes you to a SurveyMonkey link. Again, we're always looking to improve these. So please give us some feedback. And if you are wanting to continue this conversation right now, join the Discord channel. The Discord channel link is there. It's also at the bottom of your page on the website. So click on that and go and, again, have those conversations with like-minded people. Ask the questions of the investors, the mentors, anybody who's on there. Just carry on the conversation and build those relationships. Finally, from me, we do have our next session, which is all about space supply chain and market dynamics. That's happening next Monday at 1 p.m. Again, if you go down to the bottom of your page right now, there should be a banner across it that says sign up for the next session. Please go and sign up for it, and we explore the space supply chain and market dynamics. So I guess it just leaves me to say thank you so much for joining us. We shall see you again next week. This has been a Business Horizons session on behalf of the UK Space Agency. See you again soon.